Hi, welcome back to the channel. My name is Dave, and today we're talking about NUSI from Nationwide. Now, this is another covered call ETF of sorts. We've been talking about several, trying to determine which ones belong in our income portfolio. So the objective here is really to protect our basis, or the money that we put in, offer ourselves some growth, and then every month or quarter pass out a nice distribution that we can count on, use as income. If we do all that, then we're having success, right? That's kind of the goal of an income portfolio. So NUSI is a little bit different in the fact that it uses a collar strategy. Collar, I don't say that very well, but it's not what I wore to the club last night. It's actually an option strategy, and we'll talk about what that is too and how that works. So if that is what you're looking for, please stick around. Whoop. As I'd like to often point out, when it comes to an income portfolio, you have to make sure that you're the right person for an income portfolio. If you're young and just trying to grow your wealth, this isn't for you. But if you are young, but you want the income, or you're older and you want that income in a setup like this might be right for you. So that's the objective, and that's what we're trying to build out here. So let's take a look at NUSI and try to understand a little bit about how this fund works. So let's start with a quick overview of this fund. This is directly from their website. It hasn't been around for that long. Inception date's 12/19 of 2019. It's got an expense ratio of 0.68%. So that means for every $10,000 invested, you'll pay $68 to help manage this fund. That's pretty high compared to a couple that we've looked at, like JEPI and JEPQ, which are two that we like a lot so far. And they're at 0.35%. So again, this is just about double that. But it is in line with like what you'd pay for Global X, which is around 0.65% for something like QYLD. Now they've got 104 holdings. That's because it's based on the NASDAQ 100 index, just like QYLD. So very similar setup, and we'll take a look at those holdings here in a little bit. Total net assets of about $580 million. So it's a small fund, and we'll also take a look at how this thing's grown and contracted since 2019. Now, fund characteristics here. This targets a high monthly income based. It's a rules-based option trading strategy based off that NASDAQ 100. So we'll take a look at that, and we'll try to understand this whole rules-based idea. And it says may offer a measure of downside protection. It employs a constant, fully financed market hedge that seeks to reduce downside risk. And this is that collar that we kind of alluded to at the start here. So we'll see how that's working out as well. Now, one thing that I found kind of interesting based off that first slide was the fact that this is only a $580 million fund at this point. If you look at inflows, outflows, or total assets under management for NUSI, you'll see that 3 years ago it had just gotten started, and it ramped up pretty quickly till it got to about a $1 billion fund. Now it sits at $560 million, or $580 million, I should say. But in comparison, if we look at JEPI over the last year, we see that one's gone from about $4 billion all the way up to $12 billion. So a lot of people haven't, there hasn't been a lot of inflows into NUSI over this period of time, but there's been a lot of inflow over this last year into JEPI. Despite the market conditions, just ignoring those, you can see this one's tripled in value versus NUSI, which has contracted. I just find that kind of interesting. That kind of gives you some insight into, I think, what the broader market is looking at when it looks at this fund. Now, if we look at the portfolio for NUSI, you're going to find the NASDAQ 100 index, just like what we found when we looked at QYLD. And I'll link my video above for that one as well. Top 10 holdings then are going to be Apple, Microsoft, Amazon. There's a NASDAQ put option. Tesla, Alphabet, Meta Platforms, NVIDIA, and PepsiCo round out the top 10. Here's the sector allocation with a high focus on information technology. So that's the portfolio. One of the things I do like a lot about NUSI is it's very transparent. You can find a lot of great information right off their website, including where it says here, view all holdings. If you click that, view all holdings from their website, it's going to download the whole portfolio, and you can kind of see where the options sit at the moment. So I've been tracking that as well, and we'll take a look at that here in a moment. And they spell out their investment process quite clearly here. So what makes this different than buying QQQ is just how they handle this color strategy. So they purchase in full replication the constituents of the NASDAQ 100 index. If you just did that, you'd have QQQ. Second there, though, they deploy a rules-based option color strategy that provides a constant, fully financed portfolio hedge with that put protection that they buy. Then they make monthly distributions paid using a portion of the premium generated by the call option, and any additional premium may be used to reinvest in the underlying portfolio of stocks. So nice and clear. And then down here at the bottom, they clearly explain that color strategy. So a near at the money to out of the money NASDAQ 100 index call option is sold with the intent of generating premium. They use a portion of that premium to purchase that put option to fully hedge the portfolio, to protect the portfolio. We'll talk a little bit more about that. And then a managed distribution is paid to investors each month using a portion of the net credit generated by the caller. So that's all nicely explained. So let's talk through this color strategy just a little bit more in depth. So I think a good way to understand this color strategy is to set one up. So let's do it right on NDX. Let's do an index option here. So in this case, we're selling to open one call contract. And today is September 6th. So I picked this out about 1 month until October 6th for the expiration date. And with the NASDAQ at 12,000, I'm giving myself just a little bit of upside. And I'm selling the strike at 12,200. So if it goes up above that, right, generally this would get called away. In this case, we're going to settle it in cash because this is an index option. With index options, there are no shares to sell or trade. It's just a cash exchange. So if we do this and we just say, okay, market order. If we just did this by itself, we're just doing a covered call, right? In that case, we're going to put $34,000 in our pocket. But with NUSI, they want to have a catastrophe clause in there, a protective put, but I like to call it a catastrophe put because it's just in case the market drops significantly over the course of a month. So we got $34,000 to play with, but we want to keep the majority of that so we can distribute that out to our shareholders. But we're going to add a leg, and now we're going to buy to open one contract. And we're going to make this our put that we're buying to protect our downside. We're going to keep that same expiration date of October 6th, but we're going to pick a much lower strike price now. So we're going to go down here and we're going to find something that we feel like we can live with as a strike price in case the market drops significantly. Now, we're going to make $34,000 when we sell this option. When we buy this option, this protection is going to cost us $13,000. So altogether, when we do this, we're going to notice that we can do a net credit here, and we're going to say, at the bid price, what do we actually get for this? So remember, $34,000, but we're spending about $14,000 on the put. We're going to net out $20,000. And that's how that caller gets set up every single month. So we're off to a good start. We set up our caller strategy, and now we wait it out. We see what happens. So the best thing that can really happen is that it goes right toward the strike price of that sold call that you have at $12,200. And that's just like a covered call, right? And that's the kind of irony of the situation here is you still want the same thing to happen as a covered call. You want it to go towards your strike price. You want to keep all that premium, right? And you want the value of all your stocks to go up. But the problem here is you've also bought that put. So typically we talk about the three things that can happen, right? First, the QQQ takes off, or in this case, the NASDAQ 100, NDX, takes off. It goes flying through the roof. In this case, the value of your call option is going to cost you more than what you received for it to close it. That's bad. And your put that you sold is going to expire worthless. Step two of it just trades sideways. Well, you keep all the premium, just like you would have done with a covered call. And your put option is going to expire worthless. So, it's okay. You did all right. You have money to distribute, but you didn't do as well if you just sold the covered call. And the third one, obviously, and this is where it really shines, is if this thing just goes in the toilet. So if QQQ or NDX just goes down 10%, let's do a comparison. QQQ versus NUSI. Well, with QQQ, if it goes down 10%, you just lost 10%. Pretty easy to understand. But with NUSI, you're going to get, let's say these are estimates. Let's say you made 3% on the call option that you sold. You get to keep all of that. And then that put protection kicks in. Let's say it kicks in at 6% down. And that means it saves you that last 4%. So you got the 3%, the 4%, that's 7%. So in NUSI, you would have only lost 3% versus the 10% that you lost in QQQ. Sounds pretty good when it works. As I mentioned earlier, if you click on that View All Holdings from their website, you're going to get all this great information and you can download it and save it. So I started doing that back on 8/12 of 22, did it again on 8/23, 8/31, 9/1, and 9/6. And I summarized all this together, kind of watching how their put and call options were maturing as they went through the month. So I was kind of watching that and I summarized it all together. And what I found for this last month is during the course of this last month, this has been an excellent example of a successful color strategy. So the option color in this case worked out really well. Obviously, it's not going to work like this every month. If it did, buy NUSI. But in this case, I started recording this information back on 8/12. We were at the top of that bull market rally. And if you look at the Apple and Microsoft holdings within NUSI, That's what those numbers represent. So obviously we're at the top of that bull market. It starts coming down in value. So first on 8/12, they have $82 million worth of Apple, right? 9 days later, it's worth 79, then 75, 74, and on down. Microsoft, same thing, kind of following the same pattern from the top of that market on down, from 64 million all the way down to 56 million. And then I'm showing the delta there. So they lost 6 million here, another 6 million, another million, another 2 million. All right, move over to the next column. Here's the call option. So on 8/12, they didn't have one. They'd already closed it out for the month. Then they reopened one at some point between 8/12 and 8/23. They opened a 9/22 expiration with a 13,675 strike price. And then again, by 8/31, they closed that out. They had 447 contracts on 8/23, and they were going to have to pay something to close that in the nature of $3.3 million. But with the market collapsing, really falling back over the last couple of weeks, the value of that call option to close it was much lower. And I'm sure they did really well on that call option side. Now on the put side, they always have that put open. So they had that first one here for an 8/22 expiration, and that would have just expired worthless at 11/175. But they got a little more aggressive when they reopened it on this 8/23 date for that 9/22 expiration. Again, this isn't the day they entered it, but this is the day that I found it, right? So this is the 9/22 12,850 put strike price. And you can see the contracts change slightly based on the information that I downloaded, but you can see the put value. So the 8/12, obviously that expired worthless, went to zero. But you can see this next entry here, it's worth 14 million, right? And then it goes 8/31 up to 26 million. And by 9/1, this one's doubled in value to 28 million. And then by 9/6, it's all the way up to 34 million. And today was another down day, so I bet you it went up a little bit more even. But don't get too excited with that, because that's going to be offset by the losses that you see over here in Apple and Microsoft. So I think this is I'm just trying to illustrate to you that this is put protection. It's going to protect your portfolio for those big drops, but you are losing value in the underlying shares, right? But when you go to close out this put, it's going to be worth a hell of a lot of money. So this is a successful one at this point. But what if we rebound between now and 9/22? That's still a few weeks, and don't think that we can't do it. So if this thing still expires above 12,850, that 34 million is gone. And that's one of the things that can hurt NUSI, are these big, quick changes in values that we're seeing within this market right now. But right now, that put looks pretty darn tasty. Will they close it out? Will they ride it out? It sounds like they have to keep it open. So for the last part of this review, let's jump over to Seeking Alpha and take a look at NUSI. Now, I am an affiliate. There are affiliate links down below if you like what you see with Seeking Alpha. I do like it. I use it all the time, but the rest is up to you. Now, one of the biggest negatives here that I'm going to find with NUSI, and maybe the one that matters the most, right, is performance. So quite a tasty yield, and we'll jump in and take a look at that. You can see the chart, very unimpressive, right? It's been up as high as about 29.5. and it's been down as low as $18.90, and it's sitting right around that $20 range right now. Now, there's been a lot of great analysis on Seeking Alpha. So one of the perks of being a member is that you get a lot of opinion pieces on here. Like NUSI takes off April call options. So you kind of see people that follow this pretty intently, and they're watching for that kind of thing. So if you are a fan of this and you want to get into it, this might be a good option. So let's take a quick look at the dividends and see how that's been performing. Dividend yields 9.5%. So obviously this is a big income generator. It puts a lot of money in your pocket. But if it's losing value significantly faster than it's putting money in your pocket, it doesn't really matter to me. It doesn't belong in my portfolio then. So dividend yield of 9.48. It is a monthly dividend payer as well. NUSI pays their dividends out towards the end of the month, and the last one was 13 cents. But let's jump over to charting, and this is the one that probably will scare most people away. So we just look at price return. NUSI is down 30.5% over the last year, compared to 13.5% for the S&P 500. So it has really performed poorly. All right, and if we adjust that to total return, well, it looks a little bit better, but still 12% versus almost 25%. And if we compare that to one of our favorites, one of the ones we've been talking about a lot on this channel, JEPI, as a comparison, jump that one in there, and you're going to see over the last year, total return, JEPI is down about 3%, S&P is down 12%, and NUSI is down 25%. So why even add this to our portfolio with that kind of performance? And if we look at year to date, similar situation, right? Down 24.6, 17, and about 7%. So why introduce this to your portfolio? I'll give you a couple of reasons, but this does say a lot about this fund and how it's performed, and it should scare a lot of people away. So overall, just poor performance, but we're trying to build out an income portfolio. We want diversification. We also want some different strategies that are going to put income into our pockets. So right now, it's pretty much covered calls and some dividend income. So I was hoping that I'd like this enough to say, yes, add it to your portfolio, because it's deploying a color strategy. It might protect us a little bit more on those downside. Maybe that'll help balance out the other things that we're trying to do within our portfolio, but I just don't see it at this point. So the performance that I've seen, the decision making based on these rule-based ideas that they have, because I think it's still decision making behind the curtain, right? You can change the rules and you can make it work for you. So if you don't tell us exactly what the rules are, I assume that it's professionally managed by a group and they're just not making great decisions on when to take off their call options and when to take off their puts as well. Because I think if you've made a bunch of money on the put, it might be time to take it off. But they're using it as a catastrophic way to protect the fund. So I get that portion of it. So I think that's part of their strategy. But overall, with that performance and that expense ratio, I just don't see it as a great one for us to add to our portfolio. So while I like the idea of the color strategy, I think it's good. It would diversify us a little bit. It's a no for me right now. I'm not going to have it in my portfolio. With that said, to be fully transparent, I did have a few shares in my M1 account and I have since scrapped it. I just sold those, got rid of it, put them into a couple other funds instead. So with all that said, right now it's a no for me. So let's bring out the ETF portfolio showdown. That's where everything sits. So here's our portfolio, and it's kind of tiny. We need to build this sucker out. We need some more good ones. So if you got some more ideas, please let me know. But right now it's yeses to JEPI, SCHD, and DIVO, and it's a no to the rest down there. Now, if we look at this, it's not too bad. We just have to diversify a little bit more. We got to get a few more in here. And down here at the bottom, I'm starting to summarize this because people love this stuff, right? When you talk about how much does it take to get to this? Well, this is giving us a yield, if you equally balance those three, of 6.27%. So if you invested $100,000, that would give you $6,270 yearly, or $522.50 every single month. So we're doing all right, right? We might be able to build that up a little bit more, might come down a little bit more, and maybe we'll have a little bit more growth. Either way, we're only going to pick ones that we love and we feel like we can really count on. So that's where it stands right now. Any questions, let me know. So we're going to continue to fill out this portfolio with great ETFs. Not average. We want the best. We're going to make this thing awesome for everybody sharing. If you got a suggestion, please add it down below. I've already got a few from you guys and I'm exploring those, and we'll get around to all of them and build out our portfolio. So again, any questions, ask down below. If you like this type of content, please like and subscribe. We'll see you next time. Have a great night. Take care. Whoop.